Let's bring in Craig Irwin from Roth Capital. He's got a neutral rating, a $150 price target on the stock. As we said, it's down at 11% on the week. It's down 3.5% today. It had been down 10% on just the day earlier in the session, so it's bounced like others. Craig, good to see you. Thanks so much for joining us. The institutional investors that you speak to, who maybe were reticent to buy Tesla at its peak valuations in recent weeks and months, do you think they're going to be drawn in now we're at $600?
So a lot of the institutions that were not involved do share my view that it was egregiously overvalued. It's only off by a third. My $150 price target is where I would be an aggressive buyer of the stock. There are probably people that would start higher than that, quite a bit higher. But there's no sane reason for the stock to have had the valuation it had, valued at more than the total value of both the North American and European automotive sectors. So, I don't see a lot of people stepping in, but we need to say that Tesla actually does have some levers that it is pulling this year. The entry into India, the upcoming mini car, these will have very large units, both of them. India will be just as good as China. The mini car will be more probably than the S, X, and 3 all put together. It's a very good concept for the European market, the Indian market, and I think the Asian markets as well. So, we're probably going to have to wait a while before a real buy signal in Tesla. This correction, I think, is really only partially over in the space right now.
I mean, it's easier, Craig, to say that it's crazily overvalued when it's falling, but for a long time it was just going one way up, and no matter what. And we're still a long way from your price target of $150 at $600 per share, which raises the question of what moves Tesla on a given day. Is it Bitcoin now? Is it interest rates? What do you think is actually driving this valuation?
So there's a lot of enthusiasm for a variety of things. One of those is software, which I think is a spurious argument. You look at the software content in vehicles today, the nav systems in cars. Who buys those now, right? You use your iPhone, you plug it in, and you have a superior system to what the automotive OEM is offering. So, then you've got robo-taxis and autonomous and all these other things. People like to daydream about this. So there are some fairly aggressive technology investors that bid in and definitely aggressively buy the stock when it's going up. But those same investors are equally as aggressive on their way out. And then retail just adds fuel to the fire, right? Retail tends to drive, a lot more momentum in the space. And then the fear of missing out plays such a big role. So we've been pretty consistent saying that, it's overvalued. When something sort of gets a value of more than the total sector and only does 500,000 units versus what I think the 45 for North America and Europe combined, million units versus 500,000 units. That's absurd.
Craig, final question. With 150 price target, the bearishness that you hold, why haven't you got a sell rating? Why have you got a neutral rating?
Because I'm a big believer that the India market is going to be fantastic. So I think Tesla has the opportunity to surprise the upside. And, I believe I'm the one that broke the news of the mini car, last year. The mini car is going to be a big deal. So the units are going to be fantastic. They're going to execute. What's going on in the stock, I don't think is really a function of whether or not Elon Musk and his team is doing a good job. It's a great company, great cars, and they're executing well. I think this is really driven by external factors as far as sort of the bond vigilantes jumping in the market and doing what they do to the equities. And then, the sector overall is one of the highest beta sectors of the market, fueled by retail. So we have negative beta on the way down. And that's really what's playing out here.